All right, welcome. Today we're going to break down the Post Office Monthly Income Scheme, or MIS for short. We'll cover all the updated details you need to know for 2026.
A lot of us are on the hunt for the same thing, right? A way to get a steady, predictable income every month, but without all the stress of the stock market. It's really the cornerstone of feeling financially secure.
And that's exactly where the Post Office Monthly Income Scheme comes into the picture. It's pretty much designed for this exact purpose, offering a kind of security that's, well, pretty rare these days.
So, let's get right into it. What exactly is this scheme?
Okay, the idea here is actually super simple. You invest a chunk of money just one time, and for that, the post office pays you a fixed amount of interest every single month. Think of it like a mini salary for the next 5 years. And the best part? After those 5 years are up, you get your entire original investment back. Simple as that.
Now, this is where things get really interesting, especially because the government just bumped up the investment limits. If you're opening an account by yourself, you can put in up to 9 lakh rupees. But if you open a joint account, say with your spouse, that limit jumps all the way up to 15 lakh. That's a pretty significant amount.
Okay, so we know how much you can put in. The next logical question is, who can actually do it?
Well, the eligibility criteria are pretty straightforward. First and foremost, you have to be an Indian citizen living in India. So unfortunately, NRIs aren't eligible for this one. The minimum age to open an account in your own name is 10. And hey, you can even open one for a minor. A parent or guardian can do it on their behalf, and it just becomes a regular account when they turn 18.
All right, let's get to the big question, the one everyone really wants to know the answer to. How much interest do you actually make? So to really understand where we are today, it helps to look back a little. You can see there were some ups and downs between 2018 and 2022, but for the last couple of years, it's been holding strong at a really competitive rate. And that brings us to right now. As of January 2026, the rate is set at a solid 7.4% per year. And remember, that's paid out to you every single month. Now, this is probably the most important part, so listen up. That 7.4% isn't just today's rate. The moment you invest your money, that rate is locked in for the entire 5-year period. It doesn't matter if rates change next month or next year, your monthly payout is set in stone. It's guaranteed. And this really puts things into perspective when you compare it to, say, a bank FD. Yeah, you might see a small bank offering a slightly higher rate, maybe 8 or 9%. But here's the catch. A bank FD is only insured by the RBI up to 5 lakh rupees. With the MIS, your entire investment, whether it's 9 lakh or the full 15 lakh, is backed by a sovereign guarantee. That's the government of India saying, we've got this. It's not just insurance, it's a promise. That's what we mean by zero default risk. Absolutely zero. Oh, and here's another little perk that's actually a pretty big deal. You know how banks often cut TDS, or tax deducted at source, from your FD interest? Well, the post office doesn't do that. You get the full interest amount credited to your account every month. Now, don't get me wrong, the income is still taxable, you have to declare it, but not having that money cut up front is a huge win for your monthly cash flow. You get what you're owed every time. Okay, so with any investment, you've got to know the rules of the game, right? Let's dive into the fine print and the conditions you need to be aware of. And the first rule is a big one. You absolutely cannot touch your investment for the first year. There's a hard lock-in period, no withdrawals, no exceptions, no what-ifs. For the first 12 months, that money is staying put. Now, what if you need your money out early, after that first year? You can do it, but there's a penalty. If you pull out your money between the 1-year and 3-year mark, they'll deduct 2% from your original investment. If you wait a bit longer and withdraw between year 3 and year 5, that penalty gets smaller. It drops to just 1%. So what happens in the unfortunate event that the account holder passes away? The scheme has very clear and simple rules for this. It really depends on whether it's a single or a joint account. If it's a single account, it's very straightforward. The nominee gets the entire principal amount plus any interest that's due, and the account is closed. But for a joint account, there's a great option. The surviving person can just have the account transferred to their name and continue the scheme as a single account, so no disruption. So after all that, the what, the why, the how, we get to the most important question of all. Is this scheme actually right for you? This scheme really is tailor-made for certain people. Are you a retiree who needs that dependable monthly check? Or maybe you're just a very conservative investor and capital safety is your number one priority. This is for you. It's also perfect if you're investing more than that 5 lakh bank insurance limit and want every single rupee to be secure. Essentially, it's a fantastic way to anchor your portfolio with something that is truly 100% risk-free.
Okay, so if you're thinking, yep, this sounds like exactly what I need, then you'll be happy to know that getting started is super easy.
It's a pretty straightforward, tried-and-true process. You grab the application form, you could even download it online to fill out at home. Then you'll need your basic ID and address proof, a couple of photos, and make sure your nominee signs the form too. Just take all that, along with a check for your investment, down to any post office, and that's it. You're good to go.
So I'll leave you with a final thought. In a world where the market is constantly going up and down and everything feels so uncertain, what's the real value of having one part of your portfolio that is just absolutely 100% safe? Something to think about. Thanks for joining me.